Hey guys, it's Key and it's Key Life Trading. Thanks for tuning into another video. So today I have a banger for you guys. So I have a easy and simple trading strategy for you guys. Even a baby can do it. All right, so there's a lot of new traders that's coming into the new world of day trading or just coming into the stock market. And one of the things you need as a trader, you need a strategy. And today I'm going to teach you one of the simple strategy that's out there. And that strategy is called the pullback strategy, right? So you can use it in both ways. You can use it as a long trader or a short bias trader. Just to let you guys know, nothing in this market is 100% guaranteed. Just a heads up. But for me, this strategy worked over and over again. The best way to pick a strategy is using one that gives you a better accuracy of winning versus losing. And this one, a lot of traders use, but there is a specific way how to trade it. And I'm going to show you guys how to do it today in this video. Before we start, please like and subscribe, and let's tap in. Okay, guys, we're in the chart. So before we get technical, let's identify some of these pullback or bull flag patterns, right? So we have one here and we have another one here. But if you look at, well, right here, sorry about that. But if you look at the chart, you'll see a lot of pullback opportunities. But we don't just trade any pullback. We always look for the best setup possible. So the best setup is when you get a ramp up like this, and then you get the pullback. You get another ramp up like this, and then the pullback. The reason why we trade pullback strategies is because it's the best entry to get in after a previous ramp up in price. So you see how price action went up when then we pull back, then we got the next leg up to a higher level. This is the best entry, right? The reason why we don't trade on the ramp up, which you can if you want to be aggressive, because you don't want to get in at the wrong time and then you get a bad fill, right? So we wait for the ramp up for people to get in on a potential trade, and then we wait for the pullback. So the way how we look at pullback is in two specific areas. One of the way we look at pullback is that here on the pullback, people are taking profit that entered on this area of the push up. So these are people that are taking profit. It pulled back a little bit, or you could look at it as price is trying to calm down before the next leg up. But those are the two ways we look at pullbacks. So we look at it as people taking profit, or price action is taking a rest before it make the next leg or next move up to a higher level. Keynote: when you're trading a pullback, you want the retracement to be at least 50%, nothing more than 50%. If it goes beyond a 50% pullback, more likely that trade or trend is over with. It doesn't always mean it's over, but you want to make sure you get a little bit of a resting period before the next leg up. So for example, here you get the big ramp up, and then you get basically after that ramp up, it basically retraces the whole move back down. We don't really want to see that. In this case, price action bounced back up and continued in the direction or the trend it was supposed to go in. But in another reality, this would have failed. So as traders, we always want to pick out A quality setups. We don't want to just randomly see a pattern and just trade it. There's a lot of technical stuff we need to include in our pullback strategy, and that will make this video a little bit longer. So if you guys want me to make a video about all the technical that's needed as you're trading a pullback or a bull flag pattern, just like or put in the comment section that you want to see me make another video. And then another thing to take note of is that the more pullback that you get, the less and less strong it is, right? So you might get a pullback here. The best entry is the first pullback. Then the second entry or the second pullback, it started getting a little bit less stronger. And as you can see, as soon as we got the second pullback, price action started to trade sideways, which we don't trade consolidation. That's the worst place to make a trade, right? Because now look at the entry. We got a ramp up, and then we got a little pullback down, and then we ramped up again and a pullback. We would more likely look for the next ramp up to continue, but as you can see, price action started to go sideways, which you're not going to get as much profit in these consolidation phase unless you're jumping in a trade with big size, which that's not the smart thing to do because you have to manage risk. But as you can see, these are small little moves, which you're not going to really profit as much unless you're a scalper. We as day traders, we look for a big move. So let's see. From here to here is what? Is a 4%, 4.3% move, compared to from here to here is a 1.7% move. I prefer to get in a trade right here to make a 4.3% move versus getting in here to make a 1.7 9% move. So that's basically it, guys. It's plain simple. But like I said, there's other aspect that you have to add in this trading pattern to make it actually work in your favor. So we're gonna wrap it up, guys. If you like the video, please like and subscribe. And also, if you want to see me trade live, check the description. I have a free link of you checking out me trading live. And that's it, guys. Thanks for tuning in. It's Key Life Trading. Peace.